right, and welcome to the Self-Made Math. This is episode 3. We've got intro music now, so we are moving up in the world. Very grateful to Keyshawn for helping put that together. Can't wait to see what it looks like after we get done posting this up. But excited to be here for episode 3 because in addition to intro music, we also have a deeper dive into some of the topics that we talked about last week, which was nickel hoarding and whether someday we might be able to make a little bit more than 5 cents on those nickels, given the fact that precious metals prices are going up and the cost of the nickel is going up as well. So let's jump right to a couple of numbers that I have pushed together to take a look and see how this little endeavor is holding up. All right, so here we have a little pricer that I put together. This is based on the work that we did last week when we figured out how much copper, how many grams of copper and how many grams of nickel were in a typical Jefferson nickel. And this morning, I went ahead and checked the latest spot prices on the London Metals Exchange and found out that the price of copper and nickel hadn't changed a bunch, but they had both gone up a little bit. So again, these spot prices on the LME or the London Metals Exchange are given to us in pounds. We need to get them to grams so that we can talk about our Jefferson nickel. So without doing all of the calculations that we did last week, we ground all those out. If you missed out, I encourage you to go back and check out episode 2 to see how the underlying math works. But we've got a price per gram for copper and we've got a price per gram per nickel. We're going to multiply that by the number of grams per coin. So in the case of copper, we're going to take 3.75 grams. That never changes. That's how much copper is in our nickel. We're going to multiply it by the current price per gram, and we're going to get what's called a meltdown value. So that tells us that there's about 3.7 cents, 3.6 cents worth of copper in every nickel that's out in circulation right now. Likewise with the nickel, we've got 1.25 grams of nickel. Current price per gram is given there. I'm not going to read it to you because it's a very long number, but we see we have almost 3 cents worth of nickel in the nickels that are out in circulation. So if we add up the melt value of our copper and our nickel, we see that we have a melt value that is still well above 5 cents. So it's about 6.5 cents now, a little bit better than 6.5 cents. Last week, we were at 6.4 cents right here. And so the meltdown value is actually increased a little bit. And to be specific about that, melt value on that Jefferson nickel that's rolling around in your change compartment in your car has gone up by about 0.75 percentage point. And the way that we're getting there is we're just taking this week's price, the current week, dividing it by the prior week, which is what we did in last week's episode, subtract 1 and then multiply. That's going to give us a ratio, and then we multiply that by 100 to get a percentage. So like I said, the meltdown value is up almost 0.75%, about 0.75%. So it's holding up. It wasn't a fluke, and we'll see where it goes from there. We'll check back on it every so often. The reason that I kind of opened with this was I've been kind of watching all week and thinking to myself about how viable is a little scheme like this where you buy up a bunch of 5-cent nickels, because their legal value is 5 cents. And though there's no way to dispose of them at a higher price today, you're speculating that there may be in the future. And one of the things that I mentioned last week was that there is a little bit of history on this, and that was in the area of copper pennies. So I wanted to start out by really kind of digging into how that market developed and where it is today, and then see how that might work if one day the government decides to make nickels out of something less expensive than the current mix of copper and nickel, which they call a cupro-nickel alloy. So a combination of copper and nickel. So that's your big word for the day, cupro-nickel alloy. So as I said, the current London spot price of copper, which is what we're talking about now. We're not going to worry about the nickel. We're just trying to figure out how this would look for a copper penny. A copper penny is one that was minted before 1983. So following last week's steps, we see that we have a price per gram of almost a penny, but not quite a penny. And then if I bring in my pre-1983 pennies, a little history lesson on these guys, pennies were 95% copper going way, way back in history, up until 1982, at which point they became more expensive to buy the metal to make the penny than the penny was actually worth. So they started substituting in zinc. But those 1982 and prior pennies are 95% copper. And we see that based on a little research I did today, this pre-1983 penny is currently, somebody will pay you, a large company will actually pay you 2.2 cents for that 1 penny. And again, my unit is penny per coin or per penny. And I happen to know through a little Wikipedia action that there are 3.11 grams. Each pre-1983 penny weighs 3.11 grams. I can see that also from Wikipedia that 95% of that 3.11 grams are copper, which means we've got 2.95 and a little more grams of copper in every one of those pre-1983 pennies. And if I do that math, the fact that a large online coin dealer will pay me 2.2 cents for those 2.95 grams of copper, I can get myself to a per gram price of about 7.45 cents. That is not as much as the current spot price, but it's fairly close, and we'll dig into that a little bit more later on. But the thing to see here is that you're getting more than face value on that penny, because you're getting more than twice as much as the penny is worth in legal tender terms. But you're not quite getting full spot for that same penny. So you're stuck in the middle there, but you're getting a nice premium nonetheless. The other kind of penny I looked at real quick, and I mentioned these last week as well, is the wheat penny. And these are also 95% copper, and they were minted up until 1958. And if I look at this wheat penny real quick, I see that I can actually sell a wheat penny for 3 cents, so 3 times its legal tender value, like its cousin, the pre-1983, which really would have been any penny minted from 1959 through 82. No change in the weight, no change in the composition. So we've got 2.95 and a bit grams of copper in every one of those wheat pennies. But my price per gram here, because dealers are willing to pay 3 cents for that, is actually higher. It's 1 cent and a little bit, which is actually more than the current spot price per gram on the LME. So we can't really use wheat pennies as a proxy for copper prices because they're selling more than copper is worth. And the reason for that is that wheat pennies are fairly rare at this point. Collectors have gobbled most of them up over the last 70 years. And so there's a numismatic value to those, right? So it's just a collector's value. It's not just a copper penny, it's a wheat penny. And if you can see that, hopefully in the visual here, you've got these wheat grains on the side. But those are worth, because of the numismatic value, they trade for more than a regular, 2021 penny, because not only are they made of copper, but they also have this collectible or numismatic value. So we're going to ignore those going forward, but I wanted to make sure I looked at them and got a sense for, how much of a premium you were getting on top of the copper value for the fact that it was in fact a 1 cent wheat penny. So we'll go back to our 1983 pennies. And as I said, we're not quite getting spot price, but we're getting more than face value. And in fact, if I take the ratio of what I can sell that 1982 penny for today and compare it to spot, I'm getting about 76.33% of spot. So you can interpret that very simply as you can get about 76% of spot price that's displayed on the London Metals Exchange if you've got a big hoard or a couple of rolls of pre-1983 pennies laying around. So a lot of tables, a lot of calculations, a lot of spreadsheet work here. let's look at a quick example. If you're a parent and your child is doing Common Core math, you've become very accustomed to problems like this. It's the word problem. It's all the rage in Common Core. And so I figured I would throw one of these together and try and illustrate how we might think about those pre-1983 pennies. So you are helping an elderly relative clean out their basement. You come across $100 in rolled pre-1983 pennies. Your relative tells you that you can keep them because you've been so very helpful with the cleanup. So what should you do? You got a couple options here. Option A is thank your relative and dump the coins into a Coinstar machine on your way home. Those are the big green machines you see at a lot of grocery stores where you dump your coins in. They give you a gift card or a receipt where you can go redeem it for cash at the cash register. Your second option would be to thank your relative again and go to the bank the next day and exchange your coins with your local banker. And if you saw last week's episode and click through to some of the links that I left behind from Saturday Night Live, you know all about the Citywide Change Bank. If you haven't, I encourage you to go back and look because it's a great skit. Option C is to call a reputable coin dealer and arrange to sell the pennies to them. So again, these are pre-1983, so they're 95% copper, and you got almost 3 grams of copper in each. Your fourth option, which I don't recommend, is to point out the amount of work that you've done for your elderly relative and hold out for more money. So I don't think that's really what we want to do. So we're going to focus on the first 3. Got to the punchline there. So your first option was to go to that Coinstar machine. And if you're lazy, this is a great option. However, laziness has a cost, and that cost is that Coinstar is going to charge you 11.9% in the form of a service charge to change those coins into something more spendable in terms of cash or a gift card. Therefore, you only get 88.1% of your money, and they keep the other 11.9%. And to some degree, that makes perfect sense. It's their machine; it needs electricity to run. They've got to come pick up the coins, sort them themselves, and then take them to the bank where they will exchange them for cash there. So if you end up going this route, it's the easiest option. But if you use Coinstar, you're only going to get $88.10 because you're going to take that $100, multiply it by the 0.881 that you take or keep, and then that's $88.10. Now, having said that, I also happen to notice when I pulled this visual in, that they've got a sign on there for you could buy Bitcoin, and that kind of changes and piqued my interest a little bit. So I was immediately going to dismiss the Coinstar option, but I need to go out and learn more about this Bitcoin opportunity that they have. It's a little late in the day for me to start digging into that. So stay tuned. We will cover that another time because I'm fascinated now about how I can turn my spare change potentially into Bitcoin. I have no idea what this is, but I will look into it and report back because I think that's probably an interesting topic of conversation. So that's the Coinstar. You get $88.10 in cash, not Bitcoin. Your second option is to go to the bank. And so long as you have rolled that change, the bank will usually, give you bills for that change. So you get 100% of your money. You bring in your rolls. You walk out with paper. Everybody's happy. You get 100% of it. So if you go to the bank, you're going to get $100 times 1.00, no discount. You get $100. So you bring in your 1,000 pennies. You can get 100 singles. You can get 250s. You can get 10 10s, 25s, 250s, and 50 singles. Possibilities are endless. Again, I'm going back to the Citywide Change Bank skit, which I will leave again in the show notes for this week's episode because it's just that funny. Your final option, which is a little more complicated, but I think worth the trouble, is to go to a reputable coin dealer. I used JM Bullion for my research for today's show. They're an online coin and precious metals dealer. They've been around for more than a few years, so I'm not recommending or not either way, but they are a fairly large company. And as I said, they are pretty good about putting their buy and sell prices out there for people to go and look at. So it was useful for this exercise. Currently, they are offering to purchase $50 of pre-1983 pennies for $110. Provide the one catch there is that you're going to need to pay for shipping, and pennies are not light. We'll get to that in a second. But if you were to sell to JM Bullion, you'd get $110 times 2 lots of pennies, because you've got $100 worth of pennies. So you've got two $50 lots, and that's going to come out to $220 that you're going to walk away with, less shipping. I don't know what shipping costs on $100 worth of pennies. Again, it was a level of detail that I didn't quite have time for, but I'm kind of curious to see what that might cost, because that may actually ultimately impact my decision on whether or not to hold on to nickels going forward. So the next question is, going back to last week, we see my lovely carousel of neatly rolled nickels with a face value of $100. I could have thrown them in a shoebox, but I opted to put them on a rotating cheese plate with a glass decoration in the middle, because I thought that made it look more classy. And if nothing else, we are classy here at the Self-Made Math. So my question now is, do I hang on to that $100 worth of nickels, or do I go back to the bank and just get 100 singles, or 250s, or 5 10s, and 220s, and another 10? Not sure. Currently, the nickels are sitting right on that plate where I left them last week, and I was kind of thinking about what should I do with them. So the question here is my nickel scheme viable over the long run? So we'll take a closer look at some of that. We will start off with, let me take you through the pricer that I've put together here. So my face value, I've got $100 worth of nickels. I know that the ratio of the current melt value as of this morning to the standard face value of the coins, 5 cents, I know the ratio of melt to face value is 1.307. And so that means were I able to sell that $100 worth of nickels at their melt value, I'd walk away with $130.66. I also suspect, based on some of the work that I did on the copper pennies, that I would not get full spot price for my melted coins. And so based on what I saw with the copper pennies, I might expect to get 76% of spot price or melt value for my pennies, in which case, or my nickels, excuse me, in which case, by the time I sell those nickels to a dealer, by the time I get the price that they're willing to offer, 76% of spot on the London Metals Exchange, I'm going to walk away with $99.73. That's not a profitable trade, because I can go to the bank and get $100. So at this point, at this price level, I wouldn't want to sell those nickels, even if I could, which I can't right now. But even if I could sell them to a dealer, the way the market was set up for copper pennies, it wouldn't be profitable. And then I would have to pay to ship it on top of that. So it'd be kind of a disaster financially, not something that we would do. However, what if metal prices would continue to go up? So I'm going to put a little adjustment in here and say, let's assume that my spot prices on my copper and my nickel go up 10% each. Now, the ratio of melt value to face value has gone up to 1.437, which means if I were to get 100% of melt value, I would get $143.73. Even if I paid the discount or accepted the discounted amount that a dealer might offer me, again, 76%, good assumption as we're going to get right now, I'd walk away with $109.70. Now, that's a $9.70 profit, but I haven't paid to ship it yet. So nickels are not light, nickels are heavy. And so that might not be enough to make it a profitable endeavor. What about if they went up 20%? Well, now you're up to $119, and now I'm just tracing straight down to the bottom, but you can follow the math on your screen. What about if they went up 30%? Now you're up to $129.65. So the interesting thing to note here is that melt value, that's the numerator in this ratio. The melt value can go up, the melt value can go down, but the denominator, that 5 cent face value, can never change. It's always going to spend like 5 cents. Now inflation might render you less able to buy, that full Tootsie Roll for 5 cents. Maybe you can only buy half, if inflation takes off, maybe you can only buy half a Tootsie Roll for 5 cents. But legal tender face value is always going to be 5 cents. So the only thing in your melt to face ratio that can change is your numerator. And if you think that the price of metals will go up over the next 10 years by more than 30%, you might be inclined to hang on to your nickels. And you might be inclined to not exchange your nickels for 5 cents at the bank. Maybe if you're rolling coins, maybe you just scoop your nickels into a jar somewhere and hang on to those for another day when prices go up. And just for fun, if they were to go up 50%, now you're up to $149.59. So, depending on how do shipping costs change, how does that ratio of what the dealer is willing to offer you as a percentage of spot price on the London Metals Exchange, how does that change over time? Those are all things that are going to impact your model. But since we don't have a current market for Jefferson nickels outside of just going to the bank and exchanging them for face, 76% seems to be, as good an assumption as any. It's very safe to assume that the dealer is going to give you a haircut on what they're offering, because they've got to make money too. They've got to repackage, count, store, and ultimately ship out those pennies to someone else who wants to buy them. So, 76%, what you're going to get in the future, who knows? But for this exercise, it's a good enough assumption to make. And really what you're trying to get at with this blue box is, how much higher do metal prices have to go? And there's no time limit on that, right? Your nickels are always going to be worth 5 cents. But, inflation will erode their pricing power, or their purchasing power, what they can actually buy, the amount of stuff that they can buy in the economy. But if you're a believer that over time, the metal prices will continue to increase and maybe outstrip, regular inflation, there may be a profit opportunity here. So, like I said, I'm a big fan of not rolling my nickels, but just scooping them into a box. At this point, I'm inclined to hold on to the nickels on the cheese plate because I kind of like the look of it in the office here. And I think there may be an opportunity at some point to, if not make a ton of money, at least have an interesting story to tell to my grandchildren. I think the other thing that's worth mentioning on this is that I'm speculating that there will be a secondary market for Jefferson nickels one day. We don't know that. We've seen what happened when pennies, the composition of the pennies was changed. And it took a long time to get there. I mean, technology really enabled what JM Bullion is doing with those pre-1983 copper pennies. So it's not unreasonable to assume that if prices of the copper and the nickel stay high, that the government will decide to make nickels out of something else. And so those nickels that are made with the traditional 75-25 mix of copper and nickel will be worth more almost immediately because people will start pulling them out of circulation and hoarding them. And then at some point, people are going to want to trade those on some sort of a market. And based on what's happened with copper pennies, it's not unreasonable to assume that some enterprising group of people and investors would attempt to set up a market of their own to trade these things, and in the short term try and accumulate them, and then in the longer term buy them cheap, sell them high. It's the age old saying, buy low, sell high. So you could see a business model emerging out of that. We will wait and see. As I said, in future episodes, from time to time, we'll check back and see how those copper and nickel prices are progressing. I'm going to jump off of screen share and kind of start to wrap things up here. So should have put the disclaimer at the front, but I will put it at the end of the presentation. Not a financial expert, not a financial advisor. I have no licenses to sell or do anything financially. This was just an interesting pricing relationship that I noticed. We dug into a little bit of history on similar situations in the past, specifically the copper penny, And we're trying to do a little bit of thinking and a little bit of arithmetic in a spreadsheet to see if this might be something, a situation where history repeats itself and presents a profit opportunity for us. But I would not advocate, even though I'm not giving out financial advice, I can tell you that there's no way that I'm going to take out a large mortgage on my house and then buy a bunch of nickels and wait for 30 years to see what happens. However, I will hang on to my rotating cheese plate of stacked nickels. So that's where we are this week. Look forward to next week's, where we'll do a quick update on where the metals have moved, if they have at all. And then I think we're going to start to talk about Common Core and some of the things that I think are great about Common Core, and as well some of the things that drive me absolutely nuts about Common Core math. And it's widely used throughout the country, so I think it'll have a pretty wide audience of parents, anybody particularly in the fourth to eighth grade levels. Will probably have pretty strong opinions one way or the other, but hopefully I can give you some additional perspective that you'll find useful. So look forward to that next week. Until then, thank you so much for tuning in, and we will see you on the next episode of the Self-Made Math.
You